Hey everybody, welcome back to Markets for Millennials. This is the market update for the week of September 27th through October 1st, recording on October 2nd because yesterday when I uploaded my video, I did not realize the audio was not being captured. So what we'll do is it's been a number of weeks since I've been able to update, so I appreciate your patience, and now we'll get a good look around at what's been going on the last few weeks in the markets, starting with the DXY. Now I've adjusted my trend lines a bit on the DXY. My trend lines, if I were to kind of draw them in now, more were they kind of more resembled this pattern right here, and then at one point I adjusted them down, looked to be something like this. And this is what you see on the DXY is a really it's a really good reminder that you have to be flexible with your lines and you have to be willing to adjust as early and quickly as possible, um, because now it appears that the market was respecting this trend line, as you can see as you follow my mouse up. um, and I'm really trying to simplify on my Forex and DXY charts, trying to focus more on the outer bands of the channels and the resistance and support structure, and that adjustment has been helpful, because obviously you can see the dollar has stayed in its uptrend, and that prevented me from trying to take shorts from trying to take shorts when this happened right here, because this was basically according to my previous my previous lines. These were this was a fake breakdown, and so having to adjust that. And then what I did over here um, was I drew this trend line to connect these two peaks, because I felt that the market was respecting these two peaks, and I was curious over the last few days, over the last few weeks, once I adjusted this trend line, if we were going to bounce up, what would happen? We've had an FOMC meeting that turned out to be something that was a catalyst for dollar strength, or continued dollar strength. We also have around the world, particularly the ECB, outpacing the US in devaluing their currencies. So you have to always remember the DXY is weighted against other currencies. And so even if the dollar is being devalued, even if they don't stop the printer, um, it also depends on what's going on elsewhere in the world. So I had been wondering what would happen here when we came back to this support, or I'm sorry, this resistance level where we've had these two touches, and obviously we just burst right through. And to me, it's not a problem that it burst right through. It's what is going to happen after it comes through. And so the last 2 days we've had red days, and I suspected that after breaking through to the upside that we were going to come down and retest right here and then potentially resume off, or it may turn into a situation like we had down here where we had some days selling down below my original trend line, and then we ended up coming back up and into it, and inside the channel, um, and and so that could totally happen. We could end up seeing dollar weakness coming back down, but that's what I'm looking for. And I think something to be aware of is on the top side too, as we pull back, um, that this is the range that we've kind of broken into and retested, back starting in July, August, September of 2020. And so these two horizontal levels, the green and the red right here, they've been our trading range for over a year now, and that's also the level up here where you had the test during the crisis before the dollar shot up, and so this is also a horizontal level that I'm watching. So um, getting above 94.70 will be a really big moment for the dollar. It hasn't been up at that level in a really long time, um, and then that takes me over to the yields. And I have a lot of different things that I was tracking on yields, so I'm going to darken out some of these things because I want you to be able to see a little bit of what my progression was here. Um, Obviously haven't been making videos, but I have been apprised of what was happening in the markets. So just to kind of start, originally we shot up here on yields, and I had originally made this kind of bull flag right here. We did sell down and break down from it, and what I then did was I cloned these trend lines and cloned them down every time I felt like we found support or found resistance. And then the other, and that's where these white descending lines are coming from. I have this ascending trend line as you follow my mouse up, which I made quite a while ago. And obviously this provided a pretty good idea of where the channel was until obviously we got to the early part of 2021 where we just went parabolic and vertical. And obviously that price action was unsustainable. That's why we had, I feel, this long consolidation. But then trying to figure out where yields were going to go from here um, was tricky. And I was seeing places where it was respecting this ascending trend line right here, bouncing off of it, even though it did wick down, bouncing off of it. But then also finding that it was catching resistance there at that level. And then we came back down, busted through the ascending trend line. The cloned trend lines went down here, and then we kind of had a cloned trend line downside here, and then it was the confluence of uh, the upper trend line to the ascending trend line, I should say. And so that was a little tricky. This was kind of a precarious spot to think about where yields were going. Equity markets are kind of chopping a little bit. Bitcoin, gold, and silver were not, they were not really being decisive. Um, so so this was like an interesting spot. And then I kind of thought, well, it looks like we're doing this kind of ascending wedge thing, and there's a upper resistance right here that it seems to be respecting um, because it turned out that it didn't come all the way up right here. I don't know if you can see that clearly, but right here during late August it didn't come up and touch, and then again in early September it didn't come up and touch. So it looked like the market was respecting this kind of um, this very shallow upper resistance. And then down here, we started chopping around a little bit, and then I started to kind of abandon this sort of wedge idea. Um, and then what ended up happening was we came up just very decisively, um, and then we got above the ascending trend line. But then what was really interesting was this uh, upper band of resistance from the my original bull flag has provided resistance, and it got rejected right off of that. And then it also came down past this ascending trend line. So get rid of that. We'll get rid of this, and we'll get rid of this. Um, and so I think that it's interesting. It'll be interesting to see where yields go from here. Um, I'm I'm wondering if in the first few days of next week, if we're going to get a move back in to retest that trend line, and if we're going to actually be able to close above it, um, or if we're just going to get knocked back down and continue our kind of downward sideways pattern, um, or if something else is happening. I'm not really certain why yields are coming up the way that they are. I haven't really personally seen anything um, news-wise, numbers like economic numbers-wise, to suggest that yields should be reacting the way that they are. But obviously, I'm no expert, so I'll leave that for like the macro experts and stuff like that. One thing that I did think was interesting to think about is I have these blue lines, and I'm just showing you the scale of this downtrend going back to the 80s. Um, these trend lines, I think they're a little off, honestly, but the trend lines are showing just this significant um, downside resistance, um, downside channel over decades. And you could see that earlier this year, that's what we came up into. We never closed above it. You can see like we have this green close right here. We did not close above it. Um, and so even if we do get above this, the descending white trend line, we still have this to contend with. And then beyond that, we have another blue long-term descending trend line to engage with as well. So I have a really hard time seeing yields go up past 2. I don't even think they have to go up all the way to 2 to cause more trouble as they did previously. But I was thinking about this. If you do a kind of a bars pattern um, on this move, because it's totally possible to get a move, like a really sharp move to the upside, um, and oops, I didn't do that properly. Pardon me. Um, but if you like did a bars pattern resembling where we're currently at, you actually can see that it looks like we would have price action come up into that trend line, getting us to right about the 2 level. So it's totally possible that we could get that move into 2 to the 2 spot on yields. I just have a really hard time seeing it get all the way up there, because if it did, it would, I feel like it would break so many things. The Fed forced to um, would be forced to react. And by the way, just so you know, I picked this spot right here for the to start that bars pattern, because I feel like we're seeing a similar kind of move after a bunch of green candles, kind of a similar pullback. So it's totally possible. I'm not saying it's out of the realm of possibility to get a really sharp move in yields to the upside. I just have a hard time believing that they're going to get up as far as a lot of people have suggested they could get. Um, and so so I think that that's a pretty big thing to watch for. And now, rising yields have done some damage on the equity markets, among other things. Um, and I have a couple spots that I'm watching here on the Nasdaq. Maybe to start, I didn't do this when I originally made this video, but I think I'll start on the Russell, because I want you to see how the Russell has been, if we go to the first spot to where we are right now, the Russell is at the same level it was 238 days ago, and has not made an all-time high since March 15th. And so the Russell, while all the other equity markets have been taking a pause, the Russell has not. The Russell is in the same, I mean, the Russell, I guess you could say, has been pausing for most of the year. And so I think looking at what equity markets are doing is interesting, because I think there's two views. Um, I think that one view is either equities are taking a pause before resuming up, and or like getting a quick correction before picking back up, or I think maybe there's potential to get a 10 to 15% correction to where down to the level that the Russell has been at, has stayed at. Because if you actually go, let me go. So I'm on the Nasdaq right now. If you go to early February and you kind of measure where the Russell has been to the top, so the Nasdaq had moved almost 15% um, in the time that the Russell has stayed flat. And so I wonder if we're going to get a downside correction to that same level, which would be approximately 15%. I think it's totally possible to get a move down that far. But a lot of things would have to happen. I'm not saying that markets are crashing. There's a really big difference between a correction and a crash. So, but what's been interesting is for a long time, basically just a few days after early March, like, so what is this, March 10th or so, I drew this downside trend line, or this bottom support trend line. Um, and not knowing if it was actually going to mean anything. And we actually came and touched it in May, and we hadn't touched it since May. So like 100 and something, like 130 days, I think. And so we almost came down and touched it perfectly. And so now what I'm wondering is this just going to be a bounce off like it was before? And are we going to get above this line of repair and then resume off? Or are we finally going to break down below and resume? Because if you actually look at the structure of what's happening here, we've made a lower high, and then we've now made a lower low. And so, so compared to here, so right, you have this lower low, and then you also have a lower high. And so I think that that is precarious because in a lot of cases here, when you look at these moves previously, you're not getting the lower high and the lower low. You kind of did right here, but then we got back out of it. Barely, it was barely a lower low. Whereas I feel like these lower lows that we're seeing, this first lower low has been very decisive. We even closed below a level from August, and so we're flirting with this level. If it breaks, then I think that the first place to look for support is at approximately 14,000 to 14,100. And then below that, I'm going to be looking for at approximately 13,000. Um, and it's totally possible that we could see uh, it go below that. I think that this is kind of the sweet range right here that we would catch if we had a bigger correction. This is a big if. If we had a bigger correction, I think that's the range I would look at. And then the S&P could be a similar story because we've had similar price action just to the upside going back to February. You can see I have this line right here, which is actually my 38.55 level. That's where we were the last time, or around the same time that the Russell had started just moving sideways. And so if we get a correction down that far, it would be that would be a 15% correction on the S&P. But it's got a similar structure to the NASDAQ where there could actually be multiple levels. So we have to make a lower low right here, which we kind of did, but it was a wick. Um, we have to go below this level at 42.34, um, and then that would be confirmation that we're seeing a new downtrend. Um, and what I have this, I've been talking about this for a long time in a lot of my videos. You have this, I've been calling it this big ascending wedge. A lot of people, it's been more of a parallel channel, but mine has been a wedge. And it looks like we finally broke down from that and have retested it and have resumed down. So I'm staying on the sideline here. I want to watch and see where we stabilize. And I think being on the sideline is a really good place to be right now. But similar to the NASDAQ, the line of repair is right here. Got to get above it, retest it, and resume. This actually would be a perfect spot to do that because there is the horizontal level that provides a confluence there. And then the Dow, we're seeing something very similar, except what I thought was interesting is that its lower low is minor. It's not as steep, it's not as pronounced as it is on the um, NASDAQ and S&P. So the uh, the early February level is right here at 31,140. And so again, a correction down to that far from our high would be, about 12%. So we could be seeing 10 plus. I do think that there are enough levels that could stop, say, the Dow from getting down that far. And again, I want to reiterate, I'm not calling for a crash, and I'm not even calling for 15%. I'm just saying that if the scenario arises where prices on the other equity markets on the Nasdaq, S&P, and Dow correct to the levels that the Russell has been sideways at since February, when you saw that divergence in price action, um, then then it could be time for a pretty significant correction. Or the other side of that coin is if you actually look over here at the price action history of the Russell, you had the Russell come up in the recovery from the March 2020 crash, and then it was basically sideways for a good long amount of time before actually leading into the end of the year and the start of 2021. So if we saw that, I think that's the positive way to look at this price action. So it's possible that the Dow, Nasdaq, and S&P are pausing, and then when they resume out, the Russell will resume out of its channel, and so that's also something to look for. So you got to let price be king here. You got to let price action tell you what's going on. Quick look at gold and silver. Um, we've I have these trend lines. I kind of have gone back to my previous TA, um, and then I added a cloned trend line up here, this top gold trend line, which has proven to be decent resistance to the upside. I added back my box, which is where I thought price was going to eventually find its bottom, kind of in the middle here. Um, and that was because I had been saying that this, like, I did some gold TA a long time ago. I was like, oh, this looks like a cup and handle, and then I got lit up online because people were like, no, cup and handles don't happen on that long a time frame. But it kind of looked like it, and I had predicted that price was going to come. I think when I made the prediction, gold was right here, and I was like, I think price is going to go between 1675 and 1547, and we actually touched 1675 twice now, and then a third time. And and maybe that was just fool's luck. But gold and silver both have not, like, when everyone's saying everything is inflationary, and you are seeing things like oil, or some other commodities, just like they've been on this tear for a long time. It's been concerning and a little confusing as to why gold hasn't shared, and a lot of it is connected to yields, but it does make you wonder what is going on in the macro behind the scenes, when gold is not sharing in this rally. And a lot of us thought that gold was going to go back to, over 2000 before the end of the year, and it still could. I mean, if you look at this price action, we're at the same level that we were at in July 2020, and it took us a month to go from the level that we're at now to over $2,000. So it could happen, and it can happen really fast. But right now it doesn't look like it. Gold looks super weak. We have this. This is my line of repair, which just so happens to be a clone trend line of all of my other clone trend lines over here. Um, and We had a much better previous 2 days, but still not looking good. Made a lower low, as far as a closing low, I should say, not a wick low, obviously. Um, and we haven't made a higher high for a little while, so I think that's concerning. And silver is the same story, and I added in this first line of repair. But if you actually think about it, all of our lines of repair on silver, if I just kind of eyeball them, all of our lines of repair have basically gone nowhere. And so, silver is no better. And actually, silver has been looking a lot worse. And silver is only luckily in this kind of like, final place of hope trading range. If we, going into next week, if we fall back below my 2230 level, then I'm not so sure. I'm not so sure that silver won't come back down below 20. And so that's something that I'm watching for. But again, I'm not excited about gold and silver right now. I'm actually hoping that gold and silver stay low until until we can get the until Bitcoin reaches its peak. And speaking of Bitcoin, um, we had the rise after the July 20th low, um, and I want to kind of talk about this. I brought this up. You can see it on my screen now. Um, I'm going to talk about this for a second because I've been talking for a long time about um, the uh, how I thought that the cycle actually more matched, the current cycle actually matched more of the 2013 cycle because of our long consolidation. But I actually was using the CTM cycle modeling tool. Shout out CTM. And I was trying to line up where the cycle peaks were, and I was guesstimating a cycle peak of approximately December 17th and December 18th, for this current cycle. And when I did that, um, I happened to notice that one of the cycles was lined up really, really nicely with the current cycle, and I realized it wasn't 2013, it was 2016, other than a couple of um, kind of black swan or divergence events. And so, I have previous peaks, I have the capitulation low, the accumulation fake out, which was more pronounced, in 2019 than the one in 2018, 20 or I'm sorry, than the one in like 2015, 2014, 2016. Um, and and I'm not exactly sure why, that was a little bit of a difference. We had the Black Swan COVID crash, but then you actually see price kind of staying similar, except for right here. Um, we did outperform. Not really certain why, but this is that first spot where you see the all-time high and then the first 30% pullback following the halving. But then the big divergence was right here, where in this cycle we made a higher high, but in the 2017 bull run, we actually didn't. We had another 30+% pullback. Um, and the thing that I think changed that was the February 8th announcement that Tesla had bought up $1.5 billion of Bitcoin, and that caused a whole bunch of FOMO. And then that turned into this rounding pattern. And then if what was crazy is when we had the crash, the 50% plus crash, and then if you look at the price action of our shakeout, the period between May and July 20th, it looks so similar. It's just more shallow. And then our first wave following the mid-cycle shakeout, even though it's a little bit more shallow, it definitely, like, you can see the symmetry there. And so I feel like I've changed my tune a little bit. I feel like we're more resembling the um, 2017 cycle more than the 2013 cycle. But obviously, time will tell. On Bitcoin, we've broken through our line of repair, which I feel like something changed on my chart. It's supposed to be right here. We've broken through our line of repair, and we're looking for to confirm this trend line, which will show that the second wave of the last phase of the bull market is in play. And it's been very strong. Overnight, we went down only about 400 to 500 going into Saturday, and it's a good sign that we're staying pretty strong, even though we are red so far today. After such moves, you're always concerned that you're going to get a huge move to the downside to check that. And so far, that hasn't happened yet, but we'll see what happens over the weekend. So I'm expecting again Bitcoin to move up. I think if I go to my BLX chart for a quick second, what I'm looking for, like I said, was a December 17th or December 18th peak. Um, and I think if you are holding Bitcoin, no need to get cute with leverage, just my opinion. And you just hold and smile and wait until cycle peak, which to me I think is still going to happen in December. So um, that's my update. Again, I apologize. The first video was very or was no sound. Hopefully we fixed that this time. Happy trading next week. I hope you guys have a good weekend, and I'll see you guys next time.